Bitcoin, the most famous of all the cryptocurrencies, was halved once again, marking yet another historical moment in the world of digital assets. But what does a halving entail? In essence, the reward for mining Bitcoin transaction is cut in half. Halvings reduce the rate at which new coins are created and thus lower the available amount of the new supply. Now, this was the fourth Bitcoin halving in the history of Bitcoin. So what sort of impact did it have? The price of Bitcoin actually remained relatively stable, but just because the event passed without much immediate impact on general investors and markets does not mean it was a total non-event. First of all, the impact of the halving is normally felt by Bitcoin miners first, who see their block rewards cut in half, affecting their profitability and potentially leading to changes in the mining industry as a whole. But the hope is that this will lead to higher Bitcoin prices, and this could help offset some of the extra mining cost in the short term. And now let's bring in Jessica Walker, who is a reporter at Coin Bureau, and she joins us now live from Dubai. Jessica, pleasure having you with us this morning. So, first of all, can you help us understand what is a Bitcoin halving? What does it mean and what does it entail?
Have me back. So just for some context on what is Bitcoin mining is essentially the process of adding transaction records to Bitcoin's public ledger of past transactions, which we know in the industry as the blockchain. So the halving, Satoshi Nakamoto, who was the anonymous creator of Bitcoin, designed the blockchain mechanisms to not be inflationary by capping the maximum supply of Bitcoin to 21 million, and also implementing a period halving of rewards. So before the most recent halving, as you've said, typically recurs every 4 years, the number of Bitcoins entering the supply, circulating on a daily basis, stood at 900 BTC. After the full halving, which we saw just recently, that has now dropped to a daily circulating supply of 450 BTC. And these are some of the fundamental characteristics that we see, which is why people within the cryptocurrency industry and more people on a daily basis are referring to Bitcoin as the digital version of sound money.
That's interesting. What do you think will happen now for the Bitcoin miners themselves? I mean, do you think they will have to change their business model? Will this affect their profitability in any way?
Actually, really interesting happened this week. Despite the halving taking place and the expected reduction in miner revenue, there was a surge in transaction fees on the Bitcoin network, more than 7 times the fee level that we've seen prior to the halving. So a lot of people would look at that and wonder why have we seen such a surge in Bitcoin mining fees? And the surge in network fees likely could have been driven by the launch of new projects building on Bitcoin. So the halving really highlights there is a growing collaboration between miners and also Bitcoin projects. It's certainly an interesting time to be in the space. So while people wonder, is it still lucrative to mine BTC, we are seeing that some mining firms might be diversifying into the AI world of AI operations, but we've seen the likes of Tether or USDT committing to investing $500 million in Bitcoin mining. We've also got El Salvador's partnership with Volcano Energy, building a $1 billion mining farm. So it's still a lucrative and still an appealing industry for Bitcoin miners.
Jessica Walker, thank you very much for being with us today and helping us understand more about the Bitcoin world.